Welcome back to your 1 hour in the market that's going to make you all your money. The one place you need to spend a little bit of time sitting with me and my good friend Shay here while we give you the cheat code to being profitable in this market. I am going to just get us right into it here. Apologize for the delay. We have some, you're going to be happy about this. The delay was related to some things we're going to be breaking down for you here. We're going to start getting right into it with the SPY. Our most recent trade idea that we gave you, we missed last week because we were at the conference. Got to meet some really cool people. Tom Lee, Dan Ives was there. There's just like it was a big time deal. But to go to the trade from 2 weeks ago, if you attended this stream, the SPY, what were they exactly? I believe they were the 555, correct? The SPY 555 calls we gave you are up 300%. That means if you opened one contract at $350, you made over $1,200 per contract. It was a huge win. So just again to showcase how accurate these levels are here that we're going to go through right now. So we're going to get right into it. So here we are. We are on the daily view here, just looking at where this is traded. We saw a big push up to our all-time high. We sold off. We gapped down, and we found support right here. And now we're trading in our range 568 to 571. Those of you in the Discord, you already had the juice on this. We posted it the last couple of weeks. So make sure you get access to that. So here's the deal. We are going to get this over to the 15-minute view. As I told you before, I'm going to give you the bullish and the bearish trade so that you make money in both directions. You should never be reliant exclusively on a singular directional trade. You don't want that. You want to make sure that you can make money in any market. That's the point of doing this, my friends. So we can see that we got a clear support touch 568, which means this is holding as support currently. Our bottom dollar support is this blue line. If we fall through a range, we don't want to pay too much attention to that because what we're really focused on is this 568 level right here. So I'm going to publish this chart to TradingView when we are done. So I will drop the link in here when we're good and ready. So you can either put this analysis on your chart currently, or you can wait until I publish the TradingView chart. This is directly from my chart, so you will have my exact analysis on there. If you don't follow that account, make sure you guys do it. So basically, 568 to 572 is our range here. We want to watch for a trade to the upside first and foremost. Things are not as they seem. However, we are going to simply take the price action at face value. As you can see here, we could easily come down to support and then see another move up. That would be our best case scenario. So that's the one I want to plan for because that's going to be the most profitable trade. Even if we open flat, I don't love that trade because you have a drawdown to 568, which means those near-term expiration options will lose a lot of value. You don't want to be taking trades like that. You want to be taking high conviction setups that have a fixed loss attached. So we're going to hope that we get soft open, sell off a little bit. We test support 568. This is where I am going to make my entry. This is the bullish SPY options trade. Once we get that bounce here, I expect this to come back up, clean up, test first 570. Once it gets over 570, we should go to 572. This should be a 40 to 50% swing in just a day or two, which means you should make some great money on this trade. The exact contract I'm going to be looking at is, let me go pull this options chain here. Don't worry, I know you can't see it. I figured there's no reason to switch over. We're going to go October 11. And we are going to shoot for this. 570 is pretty expensive. These options premiums are up there right now. Let's see. Implied volatility is not too high, but the delta is strong. So I'm thinking here, I would love to buy this 570 call if when we test support at 568. So this should go down a little bit. I'm looking at 570 for October 11th. The reason we want to buy near the money like that is because we want to see this gain as much value as possible. And when that delta value is high, you're going to get a great return on that options trade. So we are going to be buyers when we test support right here. And we are going to be sellers once we break above 570. And we should be up 30 to 50% on this one options trade. This is our bullish scenario on the SPY. Again, support test. And then a strong move up to test the top of this range of 572. That's our bullish scenario. So now our bearish scenario, because again, we need to be prepared to trade both ways. So we will be. We are looking at probably a neutral open and a test right here of 570.36. That will likely be our first test. if we do test higher right away, we're not taking that long bullish options trade. We're not jumping into it. We're looking for a double top. So my entry would be on a test and rejection at 572, which means the candle breaks up and then comes down and closes below this line. The 15-minute closes below this line. I'm going to show you a real life example. See, just the other day, SPY pushed up, it broke above this level, and then these candles right here tested this hammer right here, price pushed down, and we closed below 572. That's where I would have entered this trade. And as you see, I would have made a lot of money on almost a $10 move on the SPY down to support. So once we hit right here, my buying opportunity, my buying zone, right up here, 572, at our rejection from that resistance, I am going to be looking at going to the options chain here. We go puts. We're going to stick to October 11th. We are going to shoot for, let's say we aim 568, or should we go 570? It's in the money though. Wow, in the money to the downside is a lot cheaper. So we're going to go in the money. Beautiful. So we're going to be doing the 570 puts, and we will make a killing on the way down. So again, we wait for an open that's pretty strong or neutral. We watch for a push up. If we break 570, we have this contract queued up and ready to go. When we hit resistance and close 15-minute candle below, I'm going to enter that 570 put trade for October 11th. And as that comes down, that should be a 50% gainer plus. That's what I would expect for this. Is this goes in the money at 570 and then down to 568. This one should be phenomenal. That's our bullish and our bearish trade. It's that simple. Those are the two moves I'm looking for on the S&P. Again, we've done this for nearly 2 years in a row now, routinely generating anywhere from 30% to 500% on some of these trades. In just a few short days from you spending 1 hour listening to this stream and looking at this chart. Again, I'm going to publish this to our public TradingView account. You can find that at Pennyboy Stock on TradingView. I will publish this chart so you know exactly what I'm looking at and exactly what the expectation is for these contracts so that you can follow along and make some money too. So I'll kick it over to my guy here. What are you thinking looking at the price action, how it's played out the last couple of days? Where's your confidence at right now?
So I'm still, I know I might be the minority, but I really think we're going to break September lows and not get too low before August, but sometime we're going to retest those September lows. Like, again, we're in seasonality weakness. I get it. Like, the breadth is widening since last week's Fed meeting. Like, it's nice to see. Today's action was anemic, low volume, and essentially
trash.
Absolute trash. It's just today, nobody decided to show up to work. Like, again, I just think today was just a trend day, and the trend has been going up. We'll see if tomorrow's any different, but I really do think like next couple of days could be light volume, but today's tight range might give you, it's going to provide you a really quick tell tomorrow at the open of where the market's going to go. If it's going to go up or down. So like, be cautious right at the open to get indicated of like what's going to happen. But either way, like, I'm protected. I am hedged. I think it's kind of really wild to see today on how different a lot of my stocks acted today, where CrowdStrike was down 2%, Snowflake Palantir was up 2 or plus %, Cloudflare is up 4%. However, it's Confluence down 3%. Like, there was no specific industry trend. It was just like hyper specific on names catching bids today. And it's nice to see again, because it is a stock picker's market, and it's going to be even more of one next year is what I'm underwriting. It's not going to be like all stocks go up because Qs are up 20%. Like that, I think those days are over. I think it's going to be very specific on what names will catch a bid. And we'll see what tomorrow's action is. But I do think if the VIX, I didn't check, but if the VIX hit a 15 handle today, I think it's a good chance to buy some cheap hedges, like to protect yourself, where you never know in September to October, like some wonky things occur. Like, nobody can explain it. The way they describe it is it's a September thing. Like, something weird always occurs. And I really do think the election noise is really put on the sidelines right now, but that won't be the case. It's going to reoccur in the headlines, and market hates uncertainty. And this election is one of the most polarizing elections I've really ever experienced. And like I'm only 31 years old, so sure, like that's a half glass. That's a view of like I've not experienced that many elections, but it's a coin flip. Nobody knows who's going to win, and both candidates are so different that that's going to create a lot of noise, and the market hates that. So you have to like be cautious of like when will the chips start getting taken off the table until there is more clarity in the markets. And that's why I do think the next 6 weeks is going to be tough, but I really do think November and December are going to be wild. Like circa last year's November, December, where the market just flew. So I think any kind of short-term dip will be a buying opportunity. Like pounding the tape. If the market goes down, I don't know, close. Let's see with some levels, like medium-term levels, like next couple weeks. If the SPY tests 510, like sell everything you're doing, buy. Like just like I'm going to use margin, I'm going to buy. However, I will be buying if it hits 540, 545. That's going to be a level in the near term that I will be adding slightly, but I will be aggressive in the 510 to 520 range because I really don't think we're going to break 510 at all. 500, no chance, in my opinion. But I do think, again, 510 is that August bottom. Like, there's no chance we break that, in my opinion. So, like, I do think the September low is 538, 540, and the 21 EMA on the weekly chart is 545. So I think 538 to 545 is my accumulation zone right now, and I'll be waiting patiently if it gets there.
I love that. I agree. So I had 507.90 and basically 539.82. So right around 540, right around 510. So I agree completely.
Yeah.
I love it, man. And so I wanted to ask you something because I want to get real quick. Let's showcase this. My guy, Farouk from the Mobileye trade. Premium stream on Friday. We get in there, started going through the order book, turned into a live trade. It was awesome. Those options today were phenomenal. They paid out 17-20%, give or take. I was up about 15%. Close that. Easy over weekend trade. So beautiful. Congrats. I love that. I'm really interested right now. I told you so did you have a chance to look at those Chinese stocks that I sent you over?
I did. And they look juicy on the fundamentals.
You want to pop that up here and let everybody get a taste? A little under the hood.
Let's see.
The model. You're about to experience greatness, so understand that.
So I know a lot of you guys have seen my model because it is a feature in the premium space, and you guys saw it in person at the Trader's Paradise a month or two ago. So I track some backstory before I show. I track around 150 names in my model. If you guys don't know my backstory, I've spent close to a decade on the corporate strategy side for Fortune 5 companies, entertainment, tech companies. Like, my thing is digesting data, creating a narrative around it, and creating models that help create a picture of what's happening in a really elegant way that's not just like data vomit. It could be an OCD thing I have that I have to be clean and neat and right to the point. And I created this metric that I personally have been using since 2018, 2019, where it combines all my favorite fundamental metrics: EV to gross profit, free cash flow margin, revenue gross, PE, all into a specific score. So you can have apples to apples of what each company should be trading at. Because at the end of the day, all these multiple valuations on these stocks are subjective. It's just what someone is willing to buy that stock at that specific price and what that person is willing to sell that stock at that price. So it's all subjective. And the only thing you can actually tangibly say is this stock is more expensive than this stock, because that's someone's willing to buy Datadog at 120. And you want to compare what Snowflake would be trading at, comparing the Datadog at 120. That's the best apples to apples approach, in my opinion. It's been working for me, where my portfolio was up 87% last year. And right now I'm outperforming the markets at 26% this year. And it's a formula that's been very effective for me that I'm working with Austin and their team on kind of commercializing to you guys because they found it so effective. We're getting a brief look right now under the hood on this session. So let's take a look. Let me share my screen. All right. So if you guys didn't know, today was a great day for Chinese stocks. And Austin brought up to me. Are you able to see my screen? Austin?
Yes, sir.
Perfect. All right. So he brought up, let me zoom in more. So before, this is a summary table that I like to use. This is taking, it's very just only a couple metrics, as you can see, but it's getting fed from all these are all the fundamental scores across the 150 stocks I track. So you can see how much data is ingested across the board into this couple metrics that I like to use. So this right here is, it's called the PB. PB. So this is the PB score. This right here is indicating how expensive a stock is compared to their competitors, their comp. So the higher the score, the more expensive it is. But this only works if you know what specific comps to compare them against. So Chinese stocks, I think there's only 3 you can: Alibaba, JD, and PDD. So Austin's like, is this, how's a Chinese stock look in your model? I'm like, it's freaking dirt cheap, because if you can see here, it's got a score for next year, 15-15. Really interesting that JD and Alibaba have nearly identical scores when one's worth 37 bill, one's worth 210 bill. That just shows how the market thinks it should be aligned on the fundamentals, even though one's trading at, Alibaba's trading at 8% revenue growth, JD's 7%. However, Alibaba's free cash flow margin is 16% compared to JD's 3%, but the score is the same. Why is that? If you can see right here, Alibaba's trading at 9 times their free cash flow. JD's trading at only 6 times. So JD is trading at a discounted valuation compared to Alibaba. So that's why, even though the fundamental profile for Alibaba is actually significantly better than JD, this score right here is factoring in what kind of discount the market's trading JD at Alibaba. So that's why this really normalizes everything you would want in a fundamental. So right now, Alibaba and JD have identical scores, and they're trading really cheap, where 9 times, 6 times free cash flow. That's incredibly cheap for a company that's still growing the high single digits. That's profitable. The biggest issue, though, with Chinese names isn't the fundamentals. It's the narrative story, where a lot of people have gone burned. They still can see their scars on investing in Chinese names the past 10 years, that they missed out on the US tech names. And because of that, they're like, I'm not going down that value trap again, which absolutely it could be a value trap. And I really don't think Austin's going to show you the technicals after this, but I really don't think that Chinese names really are going to run until the election, because this will be a massive headwind on a Trump-led presidency for Chinese names, where Trump is really hard against China, and he's kind of leveraged a China trade war, and the volatility associated with the Trump-led presidency is at the expense of Chinese names. So this could fall under the camp of the cheap gets cheaper. However, what in my experience indicates, anything under a 20, it's a slam buy, an absolute buy. However, you also have to layer in the soft narrative around it, because this is the hard narrative of like proof on the fundamentals. The soft narrative is geopolitical risk that won't be going away in the next 2 months until after election. And you have to ask yourself, like, tell yourself, like, there is going to be a headwind where, let's bring up here. I'll show you guys real quick. Again, this is very user friendly. So you can see Alibaba. I can just put it here, JD. Let's put SC. Let's hide the rest. All right, you can see right here. Whoops. All right. Alibaba, Melly, JD, SC. Is there another e-commerce name? I guess we can, let's put Amazon in this bad boy.
I'd agree.
All right, you can see right here. What does this tell you? Really interesting. What it tells you is Amazon and Mercado Libre have nearly identical 30-point scores for next year for fundamentally. So it's like, wow, you would not assume that, again, because look at the fundamental profile. Amazon's growing in low teens with 10% free cash flow margins. However, Mercado Libre is going 34% with higher free cash flow margins. But the score is saying it's trading at a Similar valuation. Why is that? That doesn't make sense when the fundamental profile is so much better than Mercado Libre. It's because Amazon's trading at 67 times PE when Mercado Libre is trading at 90 times, where Amazon's trading at 16 times or 14 times next year's EBITDA. Mercado Libre is trading at 25 times next year's EBITDA. Again, this score normalizes all this noise. So you have to like factor in, oh, one's growing higher, the other one's more profitable. Like this gives you the exact score. So that's like the streamlined process of this. So it's nice to see. So if you want to, again, compare it against them, I don't think Alibaba will ever get the same multiple as Amazon because there's a geopolitical risk. But there could be an argument. I'm not saying that there is one or there should be, but Latin America has some geopolitical risk associated with them. So if Mercado Libre scores a 30, I don't think Alibaba should be the same kind of geopolitical risk as Mercado Libre in Latin America, but an argument could be made that maybe it should be the difference between them. It should be a 22, not 15. So if that's the case, there could be a 40% move in Alibaba, which will result in 250, 260 the stock price. If the market believes that geopolitical risk is kind of overstated in the Trump-led presidency, there should be some, maybe in the same ballpark as Latin America, but not to the same extent. If that's the case, this Alibaba and JD can run 35 to 40%. And it won't be the same kind of risk as Mercado Libre, but it'll be a same kind of category and you can kind of digest it a bit. So that's an example. Do you want me to pass to you to show technicals before I show Palantir and Snowflake? I think we should, and maybe take a break and you show the technicals on it. And then we go back so people can see the model even more.
Yeah, let's do it. 100%. So basically, let's start with JD. This chart's unbelievable. So for those of you in the premium section, we're cooking up an options trade right now that we're going to make, I'm thinking, some stupid money on it. We had our range built out 22 to 29. Now we know 29.75 is about our top. Expression above that range pushes us to 34.70s. If you look at this chart on the whole, we're going to go to the monthly here because remember, more time equals more information equals more informed is a better trade, right? We can plan it out more efficiently and effectively if we know exactly what to expect. So when we look at a chart like this, you think to yourself like, okay, this looks, tumultuous. This looks risky for me. What you're seeing is what Shay just mentioned, the volatility associated with geopolitical risk. It's there, it's real, and it's something to be mindful of. However, what I'm about to show you is how you leverage proper trading discipline to take advantage of stocks that move an insane amount of money in a short period of time without having to take any sort of outsized risk. Remember, at the end of the day, here's the game that we're playing. How do I take the least amount of risk for the biggest reward? It's a very straightforward value proposition. Our model, in combination of his fundamental side and our technical ability and indicators and other products we use, right, give us the ability to make speculations, I guess, rather than predictions, but highly accurate speculations. The same one that is the reason we're up 1,800% on our Palantir options, 800% on our Robinhood options, all these other great trades of the last year, we crushed because we used these models, we incorporated our trading elements, and we made money doing it. So here's how this is going to benefit you looking at this kind of chart, which may scare you, but rest assured, doth shall not be scared. Dad is here, and we're going to talk about why you shouldn't be scared. So if you look at this chart here, right, we got a pretty clear range forming from top to bottom. We want to maintain a risk reward of 1 to 3, meaning if I risk $1, I sure as hell better make 3. So here's how we're going to achieve that. This would be a breakout opportunity that we would be taking over $30 because as we can see, every time we break above 30, we went to 33, 10%. Okay. Then we broke above 30, we went to 38. Okay, 20% plus. And then this time we broke above 30, we went to 50. We doubled our money almost. Then this time we went to $100. So 3x, 300%. Great. I know that this has expressive volatility that I can take advantage of to basically craft a trade that will make us a stupid amount of money. So again, I'm not going to reveal all the details of the trade. You jump in the group, you join the premium section, you get access to all this on every trade. We're breaking them down like this. But for the sake of teaching you something, this is how we factor that in. So if we've got our top and we've got our bottom, we know our range. Here's the bottom, here's the top. If we pop through this ceiling right here, think of this like an apartment building. You went up to the second floor. Okay, great. Now, as long as I stay above the second floor, I might go to the 10th floor. That's good to know. But I should also know that if I go below the second floor, I can plummet to my death. That's the way I look at this. So when we look at a chart like this, we are going to only take advantage of the breakout above this level and then test our most recent range of resistance, which is clearly around $60, which tells us that we have effectively worst case scenario, we have upside to the 40s. Second best scenario, we have upside to the 60s. And then third best scenario is we retest highs at 90 plus, right? So this trade, right, factors in effectively, doing the math here, $6-7 a downside for $17 an upside. So that puts us right at about 1 to 3. But then if we hit target 2, now we're talking double your money. Okay, now there's 100% upside, and I'm only willing to risk, I'm really 1 to 3. I'm risking $1 to make 3. Now I'm risking, in that case, $7 to make 100. Wait, no, sorry, bad math. To make 30, $7 to make 30, excuse me. And then the third target when we hit 100 is a stupid equation of, okay, I'm going to make $60 a share and I only have to risk $7 to do that. That means for every $1 I'm risking, I'm getting 10 back. Does that make sense? That's my maximum upside potential. But as I take this trade to the upside, I could sell some here. Say I sell half. I basically, I'm up 50%. I sell half. So if I bought 100 shares, I'm trading $3,000. I sell, 150 shares at $47. I basically, let's do that quick math. I'm basically bringing in $7,000. So again, I started with about $3,000. I've doubled my money by selling half my shares. It's that simple. So, I did it. That's 300 shares. Sorry, I'm terrible at quick math. So nevertheless, you get the point. At target 1, I take risk off, and now I've paid less for my position. Target 2, I take some off. Now I've got even less money in the game. But here's the thing. The gains from target 1 to target 3 are far greater than the gains from entry to target 1. So that means I can carry fewer shares and have less risk, but see more return on investment on every single one of those shares. But what I'm also doing is I'm effectively putting money back in my pocket, much like real estate. I buy a house, I refinance, I get some money back. Now somebody's renting my house. It costs me nothing. That's the beauty of this. We can take the same philosophy and apply it to trading, wherein I buy, let's do the math because I feel like an asshole because I screwed that up. 100 shares at 30 is $3,000, right? Now I sell, say, 50 shares at $45-50, right? So I've made 20 a share and I've sold 50. So I'm putting 1,000 back in my pocket, right? Now I'm up at 63. So my shares have doubled. I sell 25 shares, right? So I started with 100. I sold 50, put 1,000 back in my pocket. Let's see what that would be at 60 times 25 shares. Now, this is where it gets. Now I put $1,500 in my pocket. So remember, we started with $3,000 by selling 75% of our position. We've already put $2,500 back in our pocket. So remember, we started with $3,000 here, right? By the time we hit target 2, we've got $25,000 in our possession, hard cash, right? But we still have 25 shares that if they go up to, say, 96, quick math again, so $96 times 25 shares, that's another $2,400. So I took risk off as the trade climbed, and I effectively put $5,400 in my pocket without holding and carrying the risk as if I held the whole position the whole time. So again, a little confusing, but again, we teach all this. You get a mentor. We walk you through it. It's that simple. I just wanted to illustrate to you how we're going to use a chart like this, since we've got the fundamental go-ahead to basically craft an options trade that will maximize all 3 of those targets, minimize our risk, and basically pay us back while we hold a winning trade. Like, you cannot beat that. It's beautiful. So, yeah. But that's what I love about this chart right here. I think this one's golden. We can flip over to Baba before we go any deeper. You're seeing a lot of the same stuff. So this one I've already mapped out here. We're already in this trade. So this is already an active trade idea that we're very green on. We were buying down here, 71, 72, 73. It was very public. Look at my Twitter. This one was out there in the public eye. You had the opportunity. If you missed it, that's okay. You're here now. I love you, and we're going to make you some money. So as you can see, buying off the bottom of 72 is great because now we're trading at 90 plus. So that means I'm already up about $20 a share on this whole position, right? So that's a beautiful thing. If this goes to where I expect it'll go, 150, right? I'm doubling my money, even better. But I take that same philosophy and I apply it. Say I'm buying at 70 and I sell at our first resistance at 115. Boom, I made $45 a share. If I sell half my shares there, I'm basically giving myself money back on the trade so that I don't have as much risk into the trade, so that as my money grows, it's a smaller amount growing at a faster rate rather than having a huge amount that we go and risk for small stuff. So this trade was just cake. It was easy to see. You could trade it a number of ways, but most importantly, it's making money, and we're going to continue to take risk off as we do. The reason we knew it was a good trade is because we've got a nice little double bottom set up here. So one bottom here, one here. But more importantly, we saw these big boomsticks of volume flaring up right around here, which tells us that the demand is strong for this name, even though it's trading higher than it should. And then once we finally came down, we waited for one or two more big sticks of volume. We got it, we bought, and now we're up. Beautiful. So again, this is a trade that even if you entered it back in, say, December of 23, we're constantly updating daily. So before you get into those, I'm going to give you a chance to just do a quick plug here because you've been grinding your dick off on that email list stuff. You've been basically sending everybody that juice direct to email. You're picking the creme de la creme best picks from your model. You're writing about the companies. You're talking earnings previews. You're giving them that juice. Give them a 2-second, like, what do they get and where can they find it?
Yeah. So, all right. So we recently launched Stock Savvy Prime. And essentially what inspired me was I love listening to earnings calls. It's like a geeky thing that I do because I used to be on the other end of that, where all I did was help the C-suite present on their earnings calls and like gave them commentary, back pocket items, like knowing like, oh, the analyst probably is going to ask this question, have this in your back pocket to rebuttal that question. I also help them create a narrative around their fundamentals, like what happened in the previous quarter. What's a tailwind? What's a headwind? How do you create some kind of positive twist on a headwind that really impacted those fundamentals? Like I find it entertaining because I treat it as reality TV for myself when I hear the conference calls because I know the language, I know the lingo, and hearing specific like to-dos or like, oh, if they said that, it's all fluff. Like there's something that should be worried about, or like there's no substance in what they say. Or like, oh, wow, that's really interesting that they went and that angle. That means it's real, it's tangible. Like, again, like there's a lot of noise in earnings calls, but I kind of know the lingo because unfortunately I was the one writing it for a long time. And because of that, I know how to interpret it. If this is a thesis breaking quarter, is this a thesis expanding? Is this a real competitor? Is this not a competitor? So I worked with Austin and his team. Like we're creating this new product, Stock Savvy Prime, where it's only $4 a month. And what you get in this membership will be 5 to 6 deep dives a month on growth companies within the data, AI, e-commerce, and quantum computing, semiconductors, like all my favorite names. I will be writing 1,000+ deep dives on them. What the fundamentals are for the company, what's the thesis on them, what's a potential secular growth theme that will be a massive tailwind for them. Like there's a lot of that goes into it that I have fun doing, but I understand a lot of people don't have fun doing, but I just geek out on it. So again, 1,000+ word deep dives on growth stocks, 5 to 6 a month. The first one's coming out tonight. It's on Snowflake. So you're going to see my 1,000-word pitch on why I'm so bullish on Snowflake. As you guys are aware in my Discord group, like as I finish writing, like I'm even more bullish on the name. I wish I can add more, but I'm my portfolio management. Like there's a story stock, there's a narrative behind it. Like you're capped at 10% of my portfolio because it's just risk management. But at this time next year, like that whole process begins. So I could be adding in the near term. However, that's one part of the membership you'll get. The other part will be the earnings minutes. A lot of times, like a lot of you guys, like you're busy throughout the day. Like, you have time to listen to earnings calls like I do. Or like, if the stock's down 10%, like, is this a buying opportunity? Stock's up 15%. Like, is this move real? Like, what happened in the earnings call to justify it? Like, I will be providing those minutes for you. So during earnings season, which is just about to start, I think it's not next week's regardless, earnings season is about to begin again. So I will aiming to provide like at least 1 or 2 a day on earnings minutes the day of. Like, you'll get it that night on any of my any growth stock that falls within those themes of data, AI, cloud, e-commerce, semiconductors, like all those names. If they report that week, I will be providing a minute for it, because when I was talking to Austin, like, I listen to these calls all the time, and I do it for my own benefit of like looking for the next edge of a stock that a lot of people don't see, like DigitalOcean, DOCN, the ticker. Like, stock barely moved at the last earnings report, but guess what? I was like, that GPU droplet that they introduced, that's a game changer. That's like not thesis breaking, that's thesis expanding, and it's up 50%. Today's down let's just say 45% in a matter of less than like a month or two. And this is a small cap stock that a lot of people don't really talk about, but then cloud computing, I think it'd be a major player. But if I was doing the stocks heavy prime back then, like, I would have wrote GPU droplets. This is why it's game changer. I'm going to anticipate a lot of analyst notes that are going to kind of talk that up, and you're going to see a lot of bullish notes regarding this name. Another one was PayPal. We were live at the conference when I was like, this, and it was like trading at $62, $63. I was like, stock's up 4 or 5%, but like, I'm looking at these fundamental, like hearing them talk about Braintree and seeing like, wow, this is the first time they actually expanded in years. I was like, this is a thesis changing quarter. Like, where people saying like, this is a dinosaur stock. All it's doing is take rates going lower, lower, lower. Competition's cannibalized fintech industry. So like, PayPal is a dinosaur. It's not going to survive. I was like, that quarter was thesis changing. And what do I mean by thesis changing? I think a lot of the street was caught off sides on what PayPal was. And as soon as that narrative changed, which it was, that Braintree, it was like, holy moly, like it just flipped a trend. And hearing the CEO talk about it, I was like, this has legs. And guess what? It hit a new 52. PayPal's hit a new 52-week high this week. Today, actually, I think it was. So, again, a lot of you guys participate in that trade. Hopefully, like I said, buy $70 calls, $75 calls. Like, it's thesis changing. It's going to run, and it's ran. So you're going to get that kind of commentary the day of. So you can make that justification of, is it a real move? Is it thesis changing? Like, you're going to get all that and more. So, like, again, it's $4 a month. I wanted to keep it cheap for everyone because I wanted to treat it as like a schooling of like teaching you guys to kind of learn those skills and like figure out the words or the verbiage to look out for in the conference calls, finding out the thesis of a company and then seeing how, like, tracking it along the way so you can learn that skill. Like, I wanted to keep it cheap. I could have charged $25, $50 a month. Like, there is a market out there. The demand for that is there. I wanted to keep it low, $4. I kept it as low as possible because it costs money to kind of launch this like newsletter on the infrastructure side. It costs money. So like, this is covering a lot of that. So like, again, it's more educational, and I want there to be a scaling of it because I'm here to teach you guys. So I'm looking forward to it. Tonight's the first send out, and I cannot wait. It's gonna be very fun.
It's gonna be awesome. So, and I know a lot of people that follow Shay. You guys have chimed in, which is awesome. That you've made stupid amounts of money. That's how you support him, so that hopefully we can peel him away from United Healthcare, and he could be doing this all day, every day, giving you that juice. So, if you care about your own money, might be an investment worth making. Just saying. And he's a handsome son of a bitch. Look at that guy. Come on. Who wouldn't support that guy? But yeah, here was this is right where we were for the PayPal trade. We were buying that breakout 62 after the gap up. Currently at 77. So if you bought 10 shares of that, you're already up $100 at least. So again, that pays for 2 years of stocks heavy prime. Cool. One trade. Imagine what 10 trades will do for you. Just saying. So we have to talk about it because I don't see a world in which we don't talk about it. I mean, look at this monster, dude. Just what a delight. So this is one of those trades that you will be getting insight on and should have already if you missed it. We're currently heading towards our target of $45. Our first target was actually right here, 37 bucks. I think a year ago we put that out and people said I was an idiot. They're like, that's the stupidest thing I've ever heard. You're dumb. It's when it was trading at like $7-8. It was a little more than a year ago when everyone said that we were stupid. I know you were saying the same thing, so that's awesome. We didn't quite know each other then, but we were on the same wavelength already. But when people are saying this was a stupid trade, we were buying, and as you can see, who was right and who was wrong. Nailed it. The Palantir options alone, just the one trade turned. Let's see. I want to give you an exact number here. Over 200% in equity. But what's even cooler is once again, like we don't ask you to. I don't ever ask anyone to take my word worth of shit because it's not worth anything. It's my word. So I'll show it to you right here. This is the Palantir $15 call. We are currently up 1,800%. So we were buying these. We started buying them. Let me see. Those are my sells. So that was the last buy at $2 at $1.59. These went down to about 80 cents, by the way. So you could have bought these for 80 cents. But call it $1.15. Turned $100 into $6-7 grand, which is cool. So I guess times $300 into $6-7 grand. But each individual contract, 100 into about $2,200. So again, if you're trading the right names and you have the right trade and you have someone walking you along the path throughout the whole trade, I've been updating this thing for over a year now, which is insane. Imagine what your life would be like.
I mean, I'm up. I'll post it in the group right now, but I'm up 22,000 on my Palantir equity commons. Like I got in at $11, like $12. Like again, what we've been saying for such a long time, like AI is going to cannibalize the software industry. That's absolutely real. That is a real fear that will become a reality. However, there's going to be a handful of names that will come out of it as the clear winners and part of that enterprise AI tech stack. And those 5 or 6 names are going to be able to charge unprecedented pricing power. And because of that, they will have a premium valuation against all of their comp, all of them. Right now, Palantir is the only software name that has solidified their spot in the enterprise AI world. It's there. It's happening right now, and it's going to stick and stay. And that reality is coming to play the past couple months, where 2 quarters ago, it was like, oh, whoa, it's happening. Let's wait until next quarter to see if it's going to like maintain, or was that just like a random quarter? It didn't just maintain. It just slammed the door. It happened. It just didn't even just like slightly happen. Every single metric expanded. Every single one. Multiple tailwinds on the company are occurring at the same moments in the early innings of a secular growth theme like AI that has no ceiling. Everyone is trying to get in as much as possible now because they solidified their spot in the enterprise AI world. And because nobody really knows what that's like, what the ceiling is on that space, it's going to catch a major bid, and it hasn't stopped. And luckily I bought in again. I'm pissed. I got added 10% of my shares at $21, only 10%. I should have done way more. But again, I'm glad I added some. But it makes sense on why it's running. Like right now, if you guys have a fresh powder of cash, like I don't know about adding this valuation. It's really up there. But at the same time, there is a defense mechanism with this name where it's solidified their spot in this enterprise AI world, and it deserves a premium valuation. That there's a high floor in that stock where these kind of best of breed names, it's not going to go down 20-25% unless a black swan event occurs. It's going to go by slow dips, and those little dips are going to get bought up, and you're going to see a higher high. Everything that Austin is showing you for this year solidifies that, where any kind of dip, it gets bought up, it's a new high. Everyone when it was at $26, everyone's like, oh, if it breaks 20, I'm going to add $22, $23, the lowest I ever got. Same argument. It was a trading at $32. It was like consistently at $30 or $32 And I'm victim of this as well. It's like if it hits 28 bucks, I'm going to add more. Never did. And now it's at 38 bucks. This is what happens to winners in early secular growth themes, especially when there's a narrative change, where this company is identical to where it was 2 years ago or a year and a half ago when a year ago when AIP was launched. Like nothing's changed except for the narrative and the validation of their presence in the commercial space. Same thing happened in NVIDIA in 2017 or 2016 when it was referenced as a gaming chip company. Nobody realized they were going to be essentially the center of the digital economy. When you find these winners of these early growth themes, they're going to catch a massive bid, and valuation matters less and less because their moat is so intense that competition can't erode it. And because of that, it will consistently go up as long as the market lets it. There's a handful of other names that kind of fit the same category that's not really an AI. And that's something in Austin and I are working towards of like top moat lists of like, oh, like it's the same kind of exactly what's happening in Palantir, but across a completely different industry. Those are kind of like, because I'm getting defensive for next year potentially. Like summer 2025 could be really rough, or Q3 of next year. Like middle of next year could be really rough if this recession is a reality, if the labor market continues to deteriorate and it continues like that's the worst fear. Fed cut rates, but the labor market still deteriorates. It's like, oof. Now it's an actual issue. If that occurs, I have my safety plan. It's buying these like best of breed moat names that will still have this presence in this growth themes, but they won't go down as much as of a company who has a narrative change. Like Snowflake right now, I think is really cheap. But if they can't prove that they are kind of going to belong in the enterprise AI world, like they're really never going to catch a bid. Cheap can always just get cheaper and cheaper, and especially when the SBC continues to rise. So anyway, I will show you guys my model of like why I think maybe I might have showed my model too much today. I'll leave it up to you, Austin, on that.
Well, I mean, so to Nikhil, that's a good question. So yeah, there's a lot of stocks in there. What we're telling you right now is like that's his model he uses in turn that he built that, man, from scratch. That's all him. He's using that model to run these companies through, and then we're having a conversation, our team of analysts, to discuss the trade opportunity, and that's what you'd be getting. His email, Stocks Heavy Prime, the link's scrolling across the bottom. It's $4, man. Smartest money you'll ever spend. Get it? You'll get a distilled report in your email of what looks good, doesn't look good, what we like the most, yada, yada, yada. Basically, instead of it being an overwhelming 200 names, we're breaking down the stuff that we love, the stuff that we like, and the stuff that we don't, and sharing it directly to you in a very concise report.
I mean, to also answer your question, Nikhil, is like, again, when I was working, I still am working, but I was working back in the day in the war room. Like that's what we always call the prep session for earnings calls. Like the war room, like I always had to include A+ comps for each specific like revenue funnel that the company had. So the reason I have 150 is again, data, AI, e-commerce, semiconductors, like all these different industries. There's a ton of names, and the only way for me to figure out if this stock A is undervalued or overvalued is comparing against every peer in that group. So that's the reason I don't love 150 stocks. However, I track 150 stocks to kind of figure out if the stocks that I love are overvalued and undervalued. So I do think I should share my model. I'll just share my model on consumption stocks, like the Palantirs, the Datadogs, Snowflakes, MongoDBs. Like I'm going to share you guys where the current snapshot is of all those names. But do you want to show your technicals first and then we can do it?
Yeah, definitely. So basically what he's saying to you to make it extra clear is that the model is the fundamental justification, right? Because we could trade technicals all we want, but at the end of the day, we want to take the right technical trade. We want to use technicals to craft. He put it best. So do you want to say it? Say it one more time. The fundamentals and technicals. It's the best way I've ever heard it put.
Fundamentals
full screen for that. Hold on. You got to be full screen for that. Go ahead.
Fundamentals teach you what to buy. Technicals teach you when to buy it. So that's why, even though I'm a long-term growth investor, primarily a fundamental investor, I have to have my technical hat on because timing of my investments is at the technical expense.
Exactly that. So again, he's combing through on the fundamental side to find the growth, hyper growth names that have the best fundamental values, so that when we do craft these long-term options trades and equity trades, we are doing it only with the best names that the market has underpriced, so that we're right, we're first, we make the most money. Again, if you look at any major investor, any hedge fund, they'll tell you, we just spent a whole week with a bunch of them. Most of their success, the big boys, comes from a couple small names that they took from, 25 cents to $400 a share. The NVIDIAs of the world. The guy's buying NVIDIA at $2-3, and now it's trading at a ridiculous multiple. The forward split made it even more so. So again, the fundamentals tell you what to buy. Technicals teach you when to buy. So let's talk about that. So again, fundamentals told us Palantir was the choice. We bought in at about $6-7 because the technicals warranted it. Again, we found bottom dollar support. We love this inverted hammer off the bottom. We see that there's clear indication that we could see a reversal. And then right after we bought, we got our first boomstick, doubled our money already, and it's just never stopped climbing. NVIDIA, same thing. We got a nice little support bounce right there at about $13 pre-split adjusted. Now we were loading this name up, excuse me, in November and October of 2022. So it was a while ago, right? But it's one trade that I've held that has more than 10x my money, and I still am holding a number of the shares. So just to put that into perspective. So which one did you want to hit first? Palantir?
Yeah, let's do Palantir.
Okay, so again, the cool part is we found a few times when I'm breaking down the technical targets and the time value of those targets, when he then goes, holy shit, that's right, does his little calculations and whatnot. And he's like, dude, that actually makes sense. If they grow at this rate, that'll be clearly justified by blah, blah, blah. I just let him do that because that's not my specialty. I trust him. I know he's right. So I just listen and then I go do my thing. But next price targets, expectations by April of 2025 to hit our big long-term target too. We listed years ago, 45 a share. And our Boomtown target, which this is like an idealistic scenario, by mid next year, $69-70. But if we follow current trend as it expands, what were you going to say?
No, you continue.
I'm saying our biggest point of confluence is $45. Like that's where we'd be very satisfied, even if we get a little support bounce and we continue to trade up. All major points are pointed at $45 a share.
No, I mean, a lot of people say, "Oh, $45 a share. Like that, how real is that?" And like, it's run up so much. Like, what's up to this year? The 125%. I'm trying to figure out the data point I want to share right now.
It started the year at $16, so doubled, doubled and then some.
Yeah. So what you guys need to know, I put in my post somewhere, but let me see. Palantir employee. Palantir is a completely different business model than a lot of traditional software companies, where like the head count of what Palantir has. Like, I wish I put it up. I won't say it then because I want to misquote, but like Palantir has like maybe a 10th or 15, like a 10th of like the head count of a Snowflake, but their revenues is similar. That means a lot of the deals that Palantir brings in is substantial, where Snowflake works with a lot of SMBs and like it's smaller deals. But the caveat to that is SBC costs is significantly higher than Palantir for Snowflake, because they need as many salesmen as possible to handle all these clients, because there's so many clients who have like a couple $1 million when all Palantir is essentially 15 plus. It's a substantial different business model. And because of that, Palantir has a luxury of being more fundamentally showing a fundamental prowess over Snowflake. And also the scalability of Palantir is highlighted by that as well, where they're making the same amount of revenue as Snowflake, but the 10th of the headcount. Imagine if the commercial side starts scaling, which is exactly what it's doing right now. That's not additional like headcount. It's not additional like sales and marketing. So like specific costs of pitching them. They're just going to renew, and you're seeing that they're renewing and renewing even more. And all these $6 million deals, like, yeah, you're right. It's like now perfect one example today. National, they landed another deal today. $6 million a deal with the National Institute of Health for the next 2 years. All right. Stock went up like $1 billion worth today off this news. Like I get a lot of questions on like, all right, $6 million deal. How does that correlate to $1 billion plus in market
This
cap?
is also S&P volume, because if you look at that, dude,
Yeah,
450
sure.
million on the day. Come on now. So
Which
keep in
could be
mind that when that's occurring, that's building a support base at this ridiculous price already, 36.
Yeah.
So for those of us that got in below $8, below $10, below $15, they're basically building a support base at 37 when we're already up to 300%.
Easy money now. So the reason for National Institute of Health, yes, it's $6 million across 2 years. I promise you, they will be coming back and renewing that contract for even more. That's how the Palantir like strategy works. Like this $6 million deal, sure, they're gonna come back even more in 2 years, and it's like this recurring revenue nature of their business model that's like not really scaling because they only have 100. They have like less than $500 commercial clients, I think. There are so many enterprises, so like hundreds of thousands of enterprises, and this is their scale at less than 500 commercial. That's what I mean of like, holy moly, if this is actually a reality, the scalability of their business model is wild of how much money they can make because they don't really need that much of a headcount as a traditional software company. So that's why it's like, sure, it's premium valuation, but like it can get even more because they're just beginning.
Is it fair to say that this is kind of like going to a restaurant, right? Where you pay based on what you eat, which is how most restaurants go. But just imagine there's a buffet and they charge you by the pound, right? And as you get fatter and fatter, you just eat more food. And so you keep coming back to this buffet, and you started by eating half pound, and in 2-3 years you're obese and you're eating 2-3 pounds of food at a time. Except in this example, what they're doing is going to improve the health, scalability, and efficiency of whoever has the contract, correct?
Yeah, I mean, to go off that analogy, they're going to a buffet, and it's a high-end buffet. You only eat chicken and potatoes, but there's a seafood section. And like, ooh, I've never had seafood. I'll test it out. This is an exotic component of my meal diet usually. It's newer. I don't feel confident as much anymore. So I'm going to test it out, see how I feel. And then next time when I come back, if I feel great and everything worked out and I tried something new that really made me feel better afterwards, my body actually is healthier as well, I'm going to do more. So essentially my body is the organizational enterprise where Palantir's AIP, it is considered voodoo magic because the capabilities of what they can do for your operating system is from Black Mirror, the Netflix show, or just like, wow, it's so future looking and it's too good to be true. Then I just don't believe it. It's going to be malware or something like that's going to trick me at that. And so like, I'm going to tip my toes in, test it out. But there's so many use cases and case studies that show they're all coming back for more because that voodoo magic, they're going to get comfortable with that. And you're going to soon see this myth is actually more of a reality. And you want as much of that as possible because it's a win-win scenario where they have an AIP program that's essentially solving a lot of the complexities of digital twins. And like they're going to solve your operating system issues by making you more streamlined, more efficient, more profitable. Win-win. You buy my service. We're going to make you more money, probably 5x of what we cost. Everyone wins. That's what's happening right now. And I get that the voodoo magic might scare a lot of the Fortune 5 companies, especially in like these old dinosaur industries. But at a certain point, once things start scaling and starts becoming more validated and nothing bad occurs, I think a lot of these big fish are just waiting for their competitor to kind of stick their neck out and adopt it and see getting validated. And then they're going to participate as well because they don't want to be the first one to F up. And then all of a sudden, like there's a huge business issue. Like that's just how it's going to go. And at the certain pace we've seen the past year in this AIP launch, I only see signs of commercially scalable adoption on this AIP platform. It's the biggest software launch, in my opinion, in the past decade. They are AIP. There's nothing more prominent. There's nothing more significant. There's nothing some more revolutionary. Like AIP is absolutely here to stay and change so many organizations across the board. Enterprise AI will not look the same in 5 years because of Palantir's AIP. And that's why everyone, doesn't matter what the valuation is. They want a piece of it because they just experienced what happened to NVIDIA the past 7 years. Imagine NVIDIA was like a once in a lifetime type of move. It doesn't really happen that way. There is a potential mini monster who's following the same suit as NVIDIA, and that's Palantir. And a lot of people didn't realize it, but they are this year noticing similar traits, and they want to have a piece of it until they can feel comfortable. So that's what we were seeing in Palantir. We when it was trading at mid 20s or high 20s, like in person, I was like in our fireside chat with Austin and I at that conference, like I couldn't speak more positively about Palantir. I was like, this is going to change a lot of people's perspective on what AI is in the enterprise world. They will be the first mover and the biggest beneficiary. We're seeing that right now. And it's kind of wild the pace it's at. Like the daily RSI is at an 80 plus. So caveat, looks very overbought in the short term. Doesn't mean it's going to go down. It could be basing at that level. Like what Austin said, like that S&P volume is providing a volume shelf for the stock and the charts. So like if it continues going up, like there's some kind of pullback, like $35, $36 feels like a really comfortable floor on that stock. I just don't see it breaking. And
yes,
the only way it
100.
breaks
I was just nailed it. Like 33, 34, right around this range. I think we just consolidate here. We might even go. The bands might go even a little further, right? We stay here, but then we always meet back in the middle at our long-term trend pivot. So this is back to when we entered this trade in April of 23, long-term trend pivot. Remember, it always will revert to its mean. It always does. And that's a healthy move that you want to see. But I would say that I still think price action at worst is sideways from here. Like that's how we're looking. It's like we saw a big boom, sideways, a little push, gap up, shelf, climb. This is a big climb. This is a big move, 25 to 37. I would say it's the biggest move that this is seen from a like a meta of the stock, right? Like this move I think was the most important because of the golden mean reversion, right? So anytime a stock goes to 45, right, when it IPO'd, sank down to $7, $8, $6, everyone's like, man, I got screwed because the hype was real. I was buying here at 22, 23. Now I'm down a bunch. God, this sucks. We remember that the price will always make an effort to revert to the golden mean. This is the core of our beings. The fabric of the universe in general abides by this math. So it is insane to think that the stock market wouldn't follow suit, which it does. So again, we saw all the way off. We knew. It's why we said $30.50. It's going to hit, and it did. Now what's next, right? We need to stay above $30.40 because once we surpass our golden mean reversion, which is this 0.61 Fibonacci extension, we now have expansion potential. This is where this gets fun, right? This would be our 161 extension, right? So one deviation up from what we see at the golden mean. We look at the golden mean now as this nice little safe spot. You guys have played video games before, right? And you get along your progress in the game until you hit a save point. Now you know, okay, next time I turn this game back on, I'm going to start from this point, not the beginning. This is very similar to that. We are building and consolidating, ironically, and I don't think it's ironic. I say that with a wink. We are building and consolidating with S&P record volume for the stock, but S&P volume no less, right around this golden mean reversion price point, which is basically saying, in my opinion, I'll stand on this. I don't think there's a world in which we see Palantir below $30, give or take, ever again, unless the business crumbles from within, someone does something terrible, deletes the code. Like unless the company itself gets screwed, there's no way. So if they just business as usual as they have, we've built a base that we won't see again, in my opinion.
I'm gonna show you guys my model now to show like where Palantir does
Get
against
into
their comps.
Game time.
One thing I want to add to that Black Swan event, like what Austin's calling, there is one around the corner potentially. I don't think it's real. If the government shuts down, all funding from the government business will cease. That is potentially for Palantir, government side of their business. Like again, it's not like, oh my God, the money's gonna go away. It's gonna pause, but that's gonna affect the next earnings report potentially.
Right.
And that's why the market could pull back. So like I don't hope. Sorry, that's a really bad thing to say. I don't want the government to shut down. That was really premature of me to say. However, if I was an investor, I'd be buying that opportunity because that's short-lived. Government's not going to be shut down forever, and it's not going to be shut down for months. And also, like, the threat has always been like there for the government shutdown. They solve itself like the 11th hour. Like that always solves itself. However, like if there's a narrative out there that government's going to be shutting down, it's on CNBC, CNN, etc. Like this is a name that could be impacted by that. So be cautious, be aware. Let me show you guys my model of how Palantir kind of compares against a lot of their peers, and what you can actually see what the premium valuation now is associated with an enterprise AI player. Like if you make it to that post AI world, this is the valuation you can see. So you can compare against the other growth names, like Snowflake. Let me share my screen. If Snowflake proves in the next couple quarters, like they're going to be part of the enterprise AI space, where's their market cap going to be at, or where's the stock price? That's how this model can really provide you that visibility right away. And then Austin shows you the technicals if that's going to change. So right here, are you able to see?
Yes, sir.
Perfect. All right. Let's compare Snowflake. Let's do Palantir. Let's do Datadog. Let's do CFLT. Let's do Elastic. I think those are all the good comps you can use. Okay, so if you guys remember what I said earlier, the higher the score, the more of overvalued or the more premium valuation that the market's assigning to that stock. Palantir has a score of 56. Snowflake has a score of 22. That's, again, it's validated, but holy moly, that's a massive premium valuation against Snowflake, which if you look at their profile, similar revenue like 26, 24, 23, 21. Free cash flow margins are better for Palantir, but right now Snowflake's going through a margin deterioration period of all AI-related investments towards GPU purchase. But you can see, like, even next year, Snowflake's trading at 29 times free cash flow. Palantir is trading at 76. So all this noise over here is corresponded into a score. So if Snowflake proves the next couple quarters, like, oh, whoa, this like past year is just purely investment, and that investment period is over, and they're actually making some insane go-to-market AI products, and they're going to be part of the enterprise AI world. What stock valuation are they going to be at? Like, potentially, if you want to use Palantir, who's proven like they're going to be one of the 5 names, and this is the valuation, that premium valuation the market's assigned to them. What's Snowflake's? So you times this by 2.23, because let me see. Yeah, it's 222% higher. I'm good at math. Top of my head, 250. That right there, that's a double. If they can prove in the next couple quarters that they're going to be part of the enterprise AI world, that's a $250 stock price. That's what the valuation that Palantir is showing me. So another commentary is like MongoDB. Like, if you guys don't know this name, it's freaking expensive. If you look like next year, it's not as expensive as Palantir, but it has an awful fundamental profile. Right now, it's purely a narrative issue where Oracle is dominating the database world, and the NoSQL function of what MongoDB offers, like, it's gained popularity, but it's not at the momentum you'd anticipate from 2 years ago. This could be due to business spending becoming deteriorated due to higher for longer interest rates, where if rate cuts occur, which it has already last week, and it keeps gaining momentum, business spending will pick back up, especially in an SMB world. MongoDB is heavily exposed in SMBs, and they have a lot of transaction component in that, in their business model. Where what I mean by transaction is a lot business spending is heavily vulnerable in their business model. So if business spending picks back up, you're going to see these fundamental profiles improve. And I think this is like honestly, I think 280 is a very fair valuation for MongoDB. I think it's pricier, but if this goes back to 20% and their margins expand, different story. We'll see what the score is, but that's the beauty of this model. It's live. Every day it updates automatically. It does it by itself. All I do is click data, refresh all. Beauty of it. I did all the legwork for it. Datadog. Let's compare Datadog now. Score of a 28 compared to Snowflake's 22. So Datadog has already shown the past 2 quarters they are seeing a Gen AI bump in their business. I think it was a 3% bump in their revenue. So like they called it out specifically. But if you guys don't know about the observability space, so like what Datadog does is essentially it prevents customers who go through cloud optimization from overspending, because it's very easy to do that. I won't get into the nitty gritty of the technical part of their business, but like they prevent customers from overspending on cloud optimization. But it's highly competitive, and I can make the argument that Datadog's ceiling is significantly lower than a Snowflake, a Palantir, a MongoDB, because of the competition. It's a heavy competition in that space. Preventing customers from overspending on cloud optimization feels like a product that could be replicated by any of the Googles, Microsofts, Amazons. And they do have competing products, but Datadog's go-to-market strategy is superb, like amazing to the corporate their C-suite for knowing that and just like continuing to optimize on it. But you have to ask yourself at the end of the day, like when cloud starts scaling more and more, but it's going to start hitting that mature stage of that optimization. Like, how's Datadog going to kind of compete when customers aren't worrying as much from overspending because they've gotten enough legwork underneath these major cloud providers? Like, that's like, oh, ceiling's a lot lower, but they have proven that Gen AI bumped their business, so they deserve a premium valuation than a Snowflake and Datadog. And you're seeing that, like 28 to 22, that's a 30% premium valuation against a Snowflake and Confluence, which both have a narrative issue that they aren't proving that Gen AI is being a big bump for them. So I can make the argument, though, like Snowflake's ceiling significantly higher, that because of that, they should be at least in line with Datadog, which is like nearly identical fundamental profile, like identical, like score 51 for Snowflake, 51 for Datadog. They're identical. So they should have an inline kind of score. And if that's the case, Snowflake should be trading at 1.28, I think it is, 28% premium. Snowflake should be trading at 145, 150. If not, Datadog should be trading closer to $100 if that's the case. But they won't, because they've proven that Gen AI bumped their business. So again, this is how I use my model so efficiently, because I know a lot of the backstory behind it on this is why this company's doing well, this is why it's not doing well. But this is my first layer I do on any of my analysis. Like, all right, let's see what my model shows. Snowflake's trading at 30% discount to Datadog. Why is that? I go into Datadog, their earnings reports, their calls, they call out the Gen AI bump their business. Like, all right, that makes sense. Palantir's, where's their ceiling going to be at? Like, I was tracking my again, I've had this for years. So I knew back in the day when I'll put CrowdStrike down. CrowdStrike used to have a score of 50 plus on here. They proved, like back in the day, I mean, a couple months ago, that they're the best of breed cybersecurity name. They deserve a premium valuation against all their cybersecurity comps. Like, it was definitely justified and validated of like why they deserve a 50 plus score on here. As soon as that outage happened, boom, this 50 score went back towards the mean of the competitors because they lost that premium valuation. And I have not proven this yet. I have not checked this out, but let's see how accurate that is. Palo Alto, let's see what the score is. 28. Okay. Let's see SentinelOne, 21. So now, knowing what happened with CrowdStrike's bounce from 200 to what was $200? Let's see. Let's do when it bottomed at $200. So let's see. That's a 30% discount. Let's do 0.7. Look at that. The bottom was at the SentinelOne comp. So that's where it bottomed. Like the market was indicating like, oh, they're getting punished, but like they're trading at a discount of Palo Alto, and they should be more expensive than SentinelOne because they have a far superior product. It's a little excessive. So now you can make the argument, which I kind of want to make right now, where CrowdStrike at 300 feels very fair. Right now, they have a 15% premium valuation in Palo Alto, and they have a significantly higher premium valuation in SentinelOne that I don't think it will return back to the days of 50 plus. But right here feels fair until we fully see like the revenue kind of going back up, because right now it went from 28% to 23%. This was not the case before. It used to be 32% to 28%. The outage had a significant impact on the top line revenue. Same with our free cash flow margins, where this used to be at 32% plus. So until we see bottoming on the margins and the revenue, like I don't feel rushed to get into CrowdStrike, because right now they're showing me a 15% premium against Palo Alto, where you can make the argument, wow, SentinelOne's significantly cheaper. They can maybe catch a bid, especially if takeover rumors start picking back up, which I do think that's going to happen when rates start occurring. That's going to amplify a lot of the investment capital that's been on the sidelines for a lot of these companies. Because like, why risk the biscuit with a higher for long interest rate environment when we can make 6% of our cash is sitting in the bank doing nothing? Why go acquire and deal with all the synergy risk, valuation, multiple negotiation? That's too much of a headache. Let's just guarantee to get that 6% a month, 6% a year in guaranteed revenue. Those days are over. So now that the rate cuts are occurring, a lot of this investment capital has been on silence for years, are going to start going back into play on investment avenues for those organizations. So you can see a lot of the smaller caps, like right here, you can see JFrog catching it. Like anything that's around a 20 or lower, I think will catch a bid, because markets essentially telling us that they don't have a really long-term moat. They can't compete against the bigger players. They have a niche product that won't ever platformize. So Frog is a candidate. S is a SentinelOne. Look at UiPath has a score of a 12. The market is literally killing the stock, saying like, I don't believe that you have a moat. So that's essentially telling me like, this is an acquisition. Again, like this model I put together, like this is what it's not the same fashion, but like I create models like this to communicate the C-suite of like, if they're looking for acquisition targets, like I create a model and show them how they compare against peers if it's significantly undervalued, and the CTO or the SVP on IT loves the tech. That's a narrative I have to present to the C-suites on like, this is an interesting opportunity. CTO, the tech IT guys are backing me up on their tech. We should go down this avenue and kick the tires on this. Like, this is how it kind of works on the corporate strategy side. The same side, it works on the stock picking side. And again, I go through so many data points, and like that Nikhil said, like 150 is excessive, but I need other data points of laggers to kind of figure out how overvalued Snowflake is, or CrowdStrike, or Palo Alto. Like, I need the comps to compare them against, and that's kind of how this works. I'll pass it back to you, Austin. I just went over a lot, but
yeah, that was a lot. But I was a listener, so it was good. I was like, shit, I'd watch this. Cool. I like it. But yeah, all right, let's get into the smash or pass here. Let's be quick. Let's be pragmatic. So this is your opportunity to drop a ticker in the chat. I don't know if we can get through all of them. We'll get through as many as we can. All you have to do is type that ticker in the chat, pull it up on the screen, talk about whether or not it looks good for a long opportunity. I am very open to any and all uranium related names right now. I am very interested in seeing how uranium performs, and if we get a rotation from uranium into crypto, or from crypto into uranium. This could be a fun couple years for energy. I know it's neither of our specialties, but I'm thinking of getting into it because I think that uranium's got a little bit of play coming here.
I might have to get into it too, because that 3 Mile Island deal that Microsoft did with CEG, that's a game changer. I think they're like putting their, like, that's showing like we need energy and we have to get creative, and we're going to spend a lot of money to figure it out.
It's solar 2.0.
Exactly. So like, I think there's a lot of leg on this. Valuation is definitely up there, but I think there's a lot of leg on this specific theme.
So you can see right here, we had this one marked at 94.23. Is that being a focal point, given that was our double top right here? So this is a no-go, no-touch for me, just from a tech standpoint, until we get over this pivot, which needs to be trading 98, 99 bucks.
So they have their earnings on Wednesday or Thursday this week. So there could be a catalyst that'll buck this trend. If you guys don't know what happened on Micron, is there's massive challenges in the memory space, specifically in the semiconductor industry. And Micron saw a nasty contraction in their DRAM market share. I think it went from like 23 or 22% to like high teens. And that just essentially is telling me their leverage. It's a highly competitive space, and they have minimal leverage if you're seeing the market share decline that drastically. And there's a lot of fear that memory is a commodity in the semiconductor space. That's why the fear is in Micron. So if they can prove in their fundamentals this week that's not the case, and that slip was temporary, it was actually short-lived, this name will run. So watch out for that.
Yep. So might be worth a lotto. We'll discuss in the Discord to get your access. You'll get it. I'm gonna go skip one right here because I like that you brought that up because I was looking at it. UEC, Uranium Energy Corp. This could be interesting. I will say just that I like the idea of crypto to uranium right now. I like the trend here. This one's probably gonna be getting a smash from me sometime soon. Let's see what Stocks Buddy has to say on the monthly here. So IPO at 06, high of $9. I don't think we've really played the run that we're going to get. It looks like breakout over 7. This one gets fun. So that's what I put on my chart there for UEC. And we just kind of gave you a little taste of why uranium might get a play. So El Pollo Loco, this is ridiculous. That this is even
I totally forgot. I got to hop off. I have a 3 there. We went an hour and a half. That's wild.
We did. All right, I'm going to wrap this up.
Right.
So I'll see you later. Bye-bye.
Peace.
So there we go. Right here, got a nice range setup above 13 breakout. This is tasty. So this one's actually going to get an interesting smash from me, even though I don't understand it. I don't know how it's a real company or how it's even trading well, but it is. This is a good bottom barrel trade from a technical perspective. I don't have Mr. Fundamentals here, so keep that in mind. But I will say that I got to give that one a little bit of a smashy poo. Betwixt BWXT. Betwixt Technologies, just kidding, BWX. No idea what this company does, but it looks like it's running on the monthly. Good volume shelf 65 or so, trading at almost 100% premium to that, so keep that in mind. Volume's tapering off, price action's toppling a little bit. This is either make or break. This is either going to go to boomtown and you're going to find new highs, or this one is going to crater and go to nothing. Not nothing, but it'll come down significantly. So I'd say 131 target to upside, and I would say definitely retracement to 73 if it doesn't hold. So this one's going to be an in-betweener just because it's neither smash nor pass. So there you go. That's Betwixt. Vanya, welcome to the Discord. I love that. You're going to love it. Free education. You get some mentorship. We're there to guide you. Please show up. I'll be excited. Welcome to the team. Let's keep going. So Nguyen, we got AMD, almost said AMC. We didn't talk GameStop, which is interesting. So we should have. This one's very interesting. It's in this peculiar range here where it's got trending resistance right here that it's got to break over. Point of confluence is 168. So this is the same one where this is going to be catalyst driven. You do have earnings coming up here in October. This is one I would probably sit and wait, but I'm also sitting on a ton of NVIDIA gains. So I don't want more exposure in this sector. If you have no exposure, this name actually looks decent. I don't hate it. So keep that in mind. But I would say this one's kind of an in-betweener too, neither smash nor pass. Stocks Buddy likes it as gave you the buy at $75. So another reason to get Stocks Buddy, stocksbuddy.com. Indicators can do the analysis for you. So check that out if you're interested. It shows you right there. Calculates your entry, second entry, and stop loss, and gives you a take profit signal. So, but that one's also going to be an in-betweener just because we're not there yet. Snow. I actually I'm going to tease you here. I just posted my update in the Discord. It is free, so get the free roll. I'll drop the link right here. I just posted a full analysis on Snowflake with my entry price, my upcoming targets, and everything. So join the Discord. You'll get that right in there. I just posted it in my channel. Again, free, so get in there. Of course, we'll do NVIDIA. This one's gone to Boomtown. I'm going to kind of agree with the same thing I just said on AMD. We are kind of in this little range here, and we're starting to compress. I think downside to 105 wouldn't be the worst thing, with our eventual price target being about 168, 170 a share, eventually pushing to 200 plus. So that's what I expect for NVIDIA. That one's always been a smash and always will be, but I'm not buying now. So keep that in mind. Valero Energy, very interesting. Let's take a closer look at this monthly chart. This one's up quite a bit. Another cool feature of Stocks Buddy, you could just trace these and you'll instantly have trend lines. You don't have to know how to do TA. It kind of replaces me, but whatever. Looks like we're trading below trend line here, so this one's going to be a hard pass. Downside trade to 105. Pan West. Pan West, Palo Alto. This one has just continued to go up. We talked about the retracement to 300 and why that was interesting. I would not buy this name as high as it is. I want to see a new high first, 381. So this one's going to get a pass for me just because I don't see that much more meat on the bone here. I think there's a lot of better opportunities than this one. Stitch Vix, of course I'll do that. Sorry. This one's really wild how like this has traded. Hasn't this gone from something to nothing? Yeah, that's what I thought. This was trading up to like, how is this ever trading at $100 a share? Ridiculous. So currently riding a Stocks Buddy bull signal. Stocks Buddy calculated the stop loss at 327. I would agree with that. That seems to be the bottom of the range. So I would agree with that. This could be an interesting trade. 383, stop below 315. See where it takes you. I think possibility to $5 and change. You got a huge liquidity zone here, but this name might be completely worthless. So keep that in mind. AMAT, yeah, it's another energy, applied materials. Don't know what that is. Looks like we've already mapped this one out. We were looking at 226 as a target. Looks like it hit, and it's settling right around the one extension 166. So above 166, definitely a smash. And I would aim for retrace 200 and then eventually 322. Could be interesting. All right, we're going to wrap it up here with GameStop just because we didn't even talk about it, which blows my mind. All this cash they've been accruing from these offerings here. So it pushed up to 25, traded below. These levels are static, 23, 27, 36, 47. These levels are key. I traded this name. Keep in mind, go back in time. Feel free to go validate all this information. It's not going to show you on the monthly. But I traded this from $5 to nearly 500 when it ran. I don't know. I guess we can't even go back that far anymore. But we traded this from like $5 to shit. I don't know. What was it? $400. So we've mapped this one out a million times. I just say that to say so that you know that we've done the work to map out the price action. Did have strong buying here. I would say that we moved this range item up and we call 1934 because that looks like it's consolidating a base. So I would say that, above 23 is going to go to 27. Could be an interesting trade. And if it keeps going, it goes to 36. If it doesn't hold here, it goes to 20. And then it eventually comes back down to 12 again. So it's all as a matter of whether you want to play that game. So I will do Amazon just because I love it, and I think we're bullish, and I'm going to post some trade ideas in the coming weeks on this one. We already have had a few. I've been buying this one up, slowly adding equity. This one's looking crisp and tender. Next price targets, looking to this point of confluence, I'm aiming for about 230 a share. There it is. I love y'all. Stay blessed now. Always manage your risk reward. That is everything. Take this shit seriously. You will build a money machine that will print the rest of your life. I love you. Goodbye.